Christmas edition of Mark Putrino's Trading Research. Good morning, everybody. Hello, Matty Brent. Merry Christmas, my friend. You are Santa to a bunch of people.
All right, hey guys. Just
How are
reading
you this
about
morning,
this.
Mark?
Charlie Sheen got attacked at his home. I'm good. See that Charlie Sheen got attacked?
No.
Yeah. I was just watching Wall Street, the movie, the other day. Charlie Sheen attacked by neighbor who forced her way, oh, it's a woman, into his home. That Wall
Well, that's
Street's a good
probably
movie.
happened more than once.
Yeah, right? Are they sure he wasn't just filming an episode of 2.5 Men?
Right?
Yeah. My brother loves that show. I don't think it's that great, though. All right, so what's going on today? I want to show something. So if you look at like traditional technical analysis, and I'm just gonna go to the evil Google engine over here. Let's see, like let's say a double top, double TOP, double top chart pattern. All right, so this is your double top. Let's just see if we can get a bigger picture of it. Right, so this is really any technical analysis course you take, except mine, you're going to learn about this stuff. There's the first peak, second peak. There's also the triple top. And I will show you that. All right, so here's your triple top, which is really the same implications. And like in technical analysis, when this neckline breaks here, you want to subtract the distance from the top to the bottom from the bottom, and that will give you your price target. All right, so that's how that's interpreted. So let's look here. So here would be like your double bottom. All right, this is a long-term chart here of GE, and here's the problem with the traditional technical stuff, right? The pattern isn't confirmed until the neckline breaks. So in that case, this would be here. Actually, you know what? I should probably move this over a little bit. And then you measure the distance from the bottom to the top, and that will give you your target. And sometimes these patterns work out pretty uncannily well. But I think the thing is that if you wait for that to happen, if you wait for that confirmation to happen, look how much of the move you've given up already. So, so hopefully, if we were astute and figured out what the hell was going on, we would have gotten into the position down here. So this is why I don't really talk about these patterns that much. But I do talk about the ascending and descending triangles, right? Those are classic patterns.
And they work a lot.
Yeah, they're pretty accurate, or pretty reliable, I should say. Sorry, guys. So here's a triple top, and here I have it illustrated. So according to the traditional method, this is where your pattern would be confirmed when this neckline breaks, meaning the neckline is this bottom support line here, okay? And then your target would be from the top to here, subtracted from here, which would be down about there, which is still a nice move. But hopefully you would have noticed that this thing is really overbought. It's trading above its upper Bollinger Band, and it breaks its uptrend. So hopefully we would have gotten into it on the short side around here, as opposed to down here. So if you wait for these traditional patterns to confirm, a lot of times you're going to, even if the pattern is right, you're going to have, if the pattern is right, you're going to have a nice return. But if you get it up here, you're going to have a better return. So that's what I think is an interesting thing to think about. So that's why I don't really talk about those patterns, double tops and triple tops. I mean, I suppose there's validity to them, knowing what we know about how these patterns form. But hopefully, we would be nimble enough to catch this up here. All right, that's your little
Jax
why
has
I
a
don't.
question here for you, Mark.
What's that?
What are the names of the leading indicators, please?
Oh, there's like 12 of them. Um, I don't remember them all. Leading leading economic indicators. I think there's like maybe 12 leading ones if I remember correctly. Well, they include there's more than this, but consumer confidence, purchase and managers index, initial jobless claims, average hours worked. Then there's the lagging indicators, which, I mean, this stuff sometimes it works, sometimes it doesn't. So here, this would be at the conference board. Well, I don't know. I mean, I'm sure it'd be pretty easy to find. So you got your leading and you got your lagging. So some of them are considered. All right, so there's 10 components of the leading index. Okay, so here they are right here. Average weekly hours in manufacturing, average weekly initial claims for unemployment. So leading means these things are, if they're doing well, the idea is that the economy is going to do well. They're leading a good economy. And then there's the lagging ones,
He's
which are supposed to be after.
Mark. He's talking about in regards to the chart.
I mean, I don't know, dude. I don't know if they. I don't think they have charts of all this stuff here. So you could chart it somewhere. But that's a little. Let's see. So average weekly hours, average weekly initial claims, manufacturers' new orders, ISM index of new orders, which is something we look at when it comes out every month. Manufacturers' new orders for non-defense capital goods, excluding aircraft orders, building permits, the S&P 500, stock prices and leading credit index, and interest rate spread. Average consumer expectations for business conditions. So that's them. So let's go look at the S&P from yesterday. And today's the day, Friday before a 3-day weekend. I don't know if we're going to see too much today. I would think that maybe there's going to be a little pressure on the end of the day, towards the end of the day, as a lot of our, I guess, position traders. I mean, it's a pretty volatile world right now. So I would assume that people are not going to be okay with being exposed over the weekend if they have a way that they can not be. So if you take your kind of short-term, fast money trading community, I think there's a good chance that a lot of them are trying to sell as we get towards the end of the day. Let's see here. Oh wait, so Bollinger Band. All right. So anyway, so we really didn't do much yesterday, and considering the day that we had on Wednesday, this action could we argue that it wasn't very good because even though it was up, we're still lower than the prior day's open. So we're starting to form this downtrend. And today, it looks like we're really flat. Basically, we're unchanged in the pre-market. So this could be the beginning of a new downtrend, right? And when I think what we've been looking at here is we want to look at the bonds. So, as we know, things tend to sell off when they get to resistance, and this has been resistance at the former support level. And this is a kind of an interesting chart because if you think about how big the bond market is, trillions and trillions of dollars, we see these same patterns that we see in the securities of other things, like for instance, like we just saw in copper. We get people who buy back here, right? When we get to support, markets move lower, there's not enough demand, or buyers. When we get to support, there is. and we stop going lower. You get people who bought down here who come to regret their decision, assuming they still hold when we break down over here. And when we get back to this level, sometimes you get these remorseful buyers trying to bail out. So what was support can convert into resistance. Now, resistance is a large group of sellers. When the market's moving higher, there's not enough supply or sellers, so the buyers have to pay up. That pushes us into an uptrend. When we get up to resistance, things change. All of a sudden, there is enough, and we stop going higher. Now, you may notice when we get to resistance, we tend to sell off, and when we get to support, we tend to rally. That happens because the traders who are down here on support who want to buy notice the price isn't going any lower. So like I said, if the price goes lower, there's not enough demand. If the price stops going lower, all of a sudden there is enough demand. That means that new buyers are coming into the market. So some of the traders who want to buy start to get concerned that they're going to miss out. So they start to raise their prices, and that starts a bidding war. And then you bounce off of support. And then the opposite is true up at resistance. People who want to sell notice the price isn't going any higher, and then they assume there's other sellers coming into the market because it's moving higher because there's not enough supply. So if we stop moving higher, there's other sellers coming in, and then the sellers get worried they're going to miss out because the buyers are going to go to whoever's willing to pay or sell at the lowest price, and then we get the snowball effect off of that there. And then, so if that happens here, you notice we've stalled out over here for over like the last week and a half or so. That would push interest rates higher because bonds and interest rates trade inversely. Another little interesting thing here is this descending triangle pattern, which shows that as time is going by, the sellers are getting more aggressive. The peaks are forming at lower heights. The support level stays the same, which means the buyers are just kind of hanging out. But the peaks form at lower levels, which shows us that as time is going by, sellers are willing to pay or sell at lower prices. So this combination of aggressive sellers and complacent buyers sets the stage for a big move lower. So these triangles, ascending and descending, tend to be pretty accurate, or I should say reliable. Of course, they're not perfect. Those are all. I don't think there's a such thing as a leading indicator for a chart. Those are all what you would call concurrent because they're just measuring where we are at the current time. I mean, you could maybe say, all right, well, this is really overbought, so that might be a precursor to a move down, which would make it a leading indicator. But just from like a technical point of view, or like I guess an official description, if there is such a thing, these measure things in current time. So these would be called concurrent indicators. So, I mean, that's the way I would look at these things. But you can use these indicators to kind of figure out, hopefully yourself, what's going to happen. All right, this thing is extremely overbought. Well, I mean, it's overbought right now, so it's not a concurrent indicator because it's measuring where we are right now. But I know that when things get this overbought, there tends to be a reversal. So, like in that case, you could, and so in that case, so whatever. Well, I mean, I don't know. It measures the current moving averages. I don't know how it would be called a lagging indicator because it's measuring what's going on right now, right? It's not. I mean, I guess you could say any moving average thing is. Well, no, they're not lagging because when you see a moving average, it's telling you the price of the moving average now. So this is the moving average convergence divergence momentum indicator, which is pretty good. I don't really use it, but yeah. So see these two lines here are moving averages. So they're measuring exactly what the price of the moving average is exactly at that given time. So that would make it a concurrent indicator. All right. So now, if interest rates start to go again, this is like the same thing we've been talking about for the last couple of days. If interest rates, if this financials come around here and take out this support. See, here's an example where resistance converted into support, like down here. Resistance converts into support. This is because of our seller's remorse. People sell and then they're like, I made a mistake, and if it gets back to my price, I'm going to buy it back. So resistance can turn into support. So as you can see, we're kind of just teetering on here, and I think that different things drive the market at different times. In other words, there's different dynamics. Like what has been important over the last year or 2 years is interest rates. That wasn't important for decades. No one ever really talked about interest rates, at least in the context of trading. Sometimes the healthcare sector is the most important thing to watch. Sometimes the financials are the most important thing to watch. And I think right now it's these financials. Like if there's one thing two things to focus on in the market is how those bonds react to that resistance, and how this financial sector kind of navigates this. I don't know if we're going to see anything major today because, like I said, it's the Friday before a 3 day weekend, so it'll tend to be slow. And Tuesday will probably be pretty slow as well, at least traditionally, because people are on vacation and people travel, kids are home, so forth, so on. But as we can see, this might even be forming a little bit of a downtrend as well. So this looks a little on the precarious side, if you ask me. And the recent strength in brokers has kind of masked the weakness in the rest of the sector.
Merry Christmas, Sean. Have a good one, buddy.
Oh yeah, you too. Take it easy, Sean. You too. I mean, you can see like so this is the banking industry ETF, right? When we had that big move higher, let me just make sure. All right, yeah. So when we were making these moves here, okay, this was the sector. The sectors consist of industries, and the one of the industries that drove this, or maybe the only industry that drove it, was the banks, the insurance companies, the broker dealers. They didn't, they didn't participate. So when you get like one part of one industry that's driving the whole thing, so to speak. Well, I guess the brokers did kind of well too, but the insurance companies did. But when you get like a narrow part of the market that's driving it, whether it's the industry or the sector, and if it looks like that thing is going to reverse one way or the other, well, that could um, flow out into the rest of the market. It could turn things. The market's like this living, breathing thing, right? It's a reflection of just all the people that are trading at the current time. Don't think of this as Berkshire Hathaway. Think of this as the people that are trading Berkshire Hathaway. And as we can see, this thing has gone kind of sideways. So the financials have been strong, but the strength within the sector has been pretty narrow.
It's amazing that company will be around long, long, long after both of those guys are gone.
Yeah, yeah, it's quite a legacy that Buffett lives. I presume. I know he's done a lot of philanthropic work. um, but yeah, well, I guess this it's like this whole like this like whole like working class, like the Biden, like, oh, the rich people don't pay their share. And speaking of rich people not paying their share, I guess he should know.
I actually got a refund for something. I don't even know what for. They sent me a $50 check yesterday.
Anyway, you know, you go down to the Stanford Hospital there, it's the Stephen Alexander Cohen this, the Stephen Alexander Cohen this. It's like, it's not poor people that donate money to hospitals, it's rich people that donate money to hospitals. So I think, it's like, I have no issue with rich people, but some
No,
people do.
Mark,
You get these
they're
whole
what.
like, oh, if you wear a suit to work, you don't work. And I
Nah,
just,
listen, they're what drive the economy. If it didn't have some guy to see some people making hats and say, you know what, we can put everybody together and make these hats better. I can manage it, run it. I mean, that's what drives this country is entrepreneurship and people getting up and going and doing. And we've gotten away from that. And when we start getting back to it, we're going to be in a lot better shape if we survive what's coming across the border.
yeah, yeah, it's
Did you see the thing yesterday with all the Chinese lined up at the border?
it's such a just yet another disgrace. It's like they. I mean, everyone knows it. Come on, man. It's like they opened the border because everyone figures there would be all these Latinos and they're going to eventually vote Democrat, right? But now it turns out there's people coming from all over the world, and a lot of Latinos end up becoming Republicans because they're very religious. So it's
Yep.
just yet another whatever stupid ass policy that's going to have
Well,
serious repercussions if there's like a big terrorist attack here or something.
Mark, people of Latin descent are notorious, no, not notoriously, but amazingly family driven. And
Yeah.
all they care about is their family. So that familia unit is what's most important to them. And the Democrats hate the family. They don't like the dad. The dad's the dummy. You don't need the dad. The dad's just this wasteful thing. Let the government give you dad.
Yeah, that's one of the things that really irked me about that whole Black Lives Matter movement is that the people that ran that advocate for not having a nuclear home. Okay, like,
Exactly.
and then you find out that like 95% of people that are who are in jail come from broken homes. So I don't know. Well, I don't want to talk about that. Let's just keep
Yeah,
going through
yeah,
the
yeah. Let's
market.
keep going on the market. I'm sorry.
All right, so here's our consumer discretionary. Whatever. Looks like a little bit of room to reverse there. And we got our industrials. Yeah, these guys are a little overbought. So, I mean, the market looks pretty vulnerable. If you ask me, I mean, I'm not saying we're going to see a big sell off, but I think the conditions are setting up for a big sell off. You got the financials are teetering right there. The bonds could be about to make a big move. You got this largest inflows ever in the S&P in the SPY ETF, and not just by ever, but by ever by a lot, at least double. So what does this mean? This means that there's a lot of aggressive buying of the Spider ETF. When people come in to buy it, if they're big enough, if they have a large enough order, the market maker will short them new shares. They'll literally create new shares and short them to them, and then that money goes into the fund. So when you see inflows, that's what that means. So more than any other time, I mean, this says ever. It only goes back 5 years, but I would think that this is probably true. More than any other time ever in history, people are buying the S&P. So, I mean, this is a screaming sell signal. I think if there's some kind of catalyst that brings sellers into the market, they're going to have a hard time finding buyers because most of the buyers, I think, are pretty much done. Uh, I mean, like everyone who wants to own Nvidia owned Nvidia. That's why when they came out with these great numbers, the stock actually went down because it doesn't matter how good the numbers are if no one wants to buy it, and if everyone who wants to buy it has bought in it already, well, then it doesn't matter what the earnings are, good, bad, or indifferent.
Hey, Avi's asking you if the Oracle gap is starting to trigger.
Oracle. Well, not yet. All right, let's take a closer up look at this. So this gap here. So we know that markets that gap one way or trade really quickly through the levels. See here we call this a gap because on the chart it just looks like a blank space or a gap. There's an old expression called gaps refill. It's like one of those old Wall Street sayings, and it's easy to understand why if you understand the psychology that we talk about. Like what is one of the reasons why we get resistance? And you can see an example of that right here. We get resistance at levels that were support because here's another gap, but this one didn't refill. Not every gap's going to refill, but you get support here and people buy and they think that they're made the right decision when we move higher, and when it finally goes back below their level, a lot of these people are now regretful that they bought. So they tell themselves, if this gets back up to my price and I can get out of break even, I'm going to. So it gets back there, and if you have enough of these remorseful buyers placing sell orders, the support can convert into resistance. Now, when you have a move like this here, where you close basically here and you open the next day down here, There's no trading within there. So if there's no trading, there's no one who bought it who's going to be trying to sell on the way up. So there might be this real lack of sell orders in here, or like a dearth of sell orders. So that means the buyers are going to have to pay higher prices. A buyer may come into the market and say, all right, I got a 150 or 107 and a half top to buy 100,000 shares. And maybe someone will sell them 10,000 there and say, hey, you want to buy the rest of my shares? You're going to have to go to 108 because there's a lot of other buyers around and there's hardly any sellers around. So that could make us move quickly back through the level here. But we haven't gotten back into it yet. For us to get here, right, we would need to break this resistance. I would say 106.30 is where this line is. Now, if I look at this, what are our most important price levels? Opens and closes. And then highs and lows can be important sometime too. Here, our close is 106.25. So this means there's a good chance there's going to be people who bought here and who bought here who are trying to sell. So there's going to be probably going to be some resistance at this level and at this level. So I would wait for it to clear them, and then if it clears this level, it shows us that these sellers who created this resistance, they're out of the market. They've finished their orders, or maybe they canceled their orders, or maybe they changed their orders. So if we break this resistance, it tells us that those sellers are out of the way, and then we could get up into this where there's a good chance there's going to be an air pocket, or just like a dearth of sell orders. That's my word of the day, the dearth. And then it can move quickly through it. So it's not just gaps. We see it too on fast moves, and it's the same principle. It's just not technically a gap, but we fall through these levels really quickly, and then we reverse, and then we blast back through them really quickly. So that's our fast move down, fast move up. Let's see, so here's a gap here. And then if you come over here, you can see we had the fast move down here. So here's our fast move up. So there's no one who really sold in here who really is trying to buy back over here. So the sellers got to push the price down if they want to sell. All right, yeah, so now this is going back to what I was saying before. In order for this to be a confirmed double bottom of your traditional technical analysis, you would have to wait till it gets up to here. Because there's your neckline. So if you waited for this to be a traditional double bottom, you're not going to enter the position until you get up here. Whereas I might be inclined to get into this if this short-term support breaks. So if it turns out I'm right and that I'm going higher, and a double bottom would indicate that there's a reversal underway and the market's going higher. So we would concur that the price is going higher, but I would just have gotten in much earlier than if I did the traditional thing and wait for the neckline to break. What's the smallest stock on the Tupperware?
I found one, Steve. It's SSMFL.
SSM?
SSMFL.
Uh,
FL. Oh, it may not even be listed.
So is it Tupperware? Let's see. Tupperware. Market cap 90 million. I mean, that's pretty darn small. That is pretty small. So TUP, you're saying, Matt? Yeah. I mean, think about this, right? $90 million. I know it sounds like a lot of money to us, but then you consider that Apple is $3 trillion. It's like you almost can't even do the math. It's like 100 billion go into it, or what is it? 1,000 billion go into a trillion? I don't even know. It's like that's just too big for me to conceive. But anyway, I don't know. Supposedly there's been trying to make a turnaround. This is when we got caught up in that Reddit frenzy.
Apple would be like 3,000% more valuable than Tupperware.
Yeah, it's kind of ridiculous. But who knows? I think Tupperware used to be really popular. Maybe one day Apple will be the Tupperware of the future. After they destroy our society. So, all right, yeah. So remember there was that Reddit frenzy that went on in July, and that's what made this thing blast off. Now, I don't even remember what the news was, but obviously the Reddit crowd portrayed it as being a bullish thing. And then forget all the news and so forth and so on. Where did we hit resistance? Right around 550, the same place we had resistance back here. So news aside, whatever's going on, whatever the talk is, you always got to pay attention to these market principles. And if you're in a Reddit frenzy, this is stuff is good to know because these Reddit traders, the moves they make, these things are invariably wrong. That's why you see all these rapid reversals. Look back here. Here's a really good example of our fast move up. Then we trade and we come back and then make a fast move right back through those price levels. And you can even bring it out to over here. Right? So fast move down, fast move up, fast move down. And then you can even, it even continues. Then you get your fast move up. And then, so you see, when we get into these ranges, there's a lot of vested interest within these prices because it spends a lot of time trading there. So that's why when it gets back to these levels, it kind of does the same thing. The same dynamics are going on as our buyer's remorse and seller's remorse. But when in these price levels, because you trade through them so fast, you just have less of a vested interest. There's more people who care about this down here and up here than who care about it in here. So that's why we fall through these levels. Finally, we reverse. The buyers have a hard time finding sellers. We rally, sellers come in, sellers have a hard time finding buyers. Get down here, buyers come back in, buyers have a hard time finding sellers.
I
What's
don't
that?
think it IPO'd, Jack. Tupperware's been around since the 50s.
Oh yeah, no, Tupperware is. Let's see what the all chart says. I remember my mom used to have Tupperware parties.
Mine too.
Maybe this is just when it went public. Maybe it was private up until here, May 96. I think Tupperware was like really big, I think in the 50s.
Mm-hmm.
I'm actually kind of curious. Being someone who's into history, like Tupperware is like this huge thing. All right. When did TUP IPO? 1996, yeah. So I mean the company's been around a long time, but I guess that's when they decided to go public. Tupperware's new CEO and the challenges she faces. Be nice to see a nice traditional company like this do well as opposed to all they got to do is say they're using AI and then everyone's going to pile into the stock.
Yeah, the ones that were the second picture down were the ones my mom had storing stuff in the closet. It was pretty wild.
It's do you watch Family Guy?
I do from time to time, yeah.
You ever see the one where Stewie and Brian like they start listening to Anne Murray and get like mesmerized by her and they go and find her?
No, I had not.
Dude, it's hilarious. Like they're listening to Anne Murray and all of a sudden they're just like they're like fall in love with it and they're like, oh man, this is. But anyway, it was funny because Stewie first heard it when his mother's driving him around in this car and he's in the back seat. And I remember my mother driving around in the car when I was in the back seat listening to Anne Murray.
Mark, I used
But
to
yeah,
ride in the back window of my mom's Caprice Classic.
it's a funny episode. It's one of the funnier episodes. All right, so let's see. What do we need to look at which we didn't? Let's check out our energy stuff over here. I'm going to start my Christmas shopping today and go over to the Stanford Mall. All right, so here's oil. Still kind of toying with this level here. So this is setting up to break one way or the other. As we know, when we get to these important levels, we tend not to hang out at them for too long. We get to them, we sell off, get to it, sell off. So this is slightly unusual for here to be here for 4 days. So one way or another, this is going to go. I highly doubt it's going to stay flat. And if you want to get exposure, you can start looking, and you don't trade oil, you can start looking at some of your stocks in the energy sector. What is Clifford getting? I don't know, probably a lot more than I am. He's got a stocking. I don't have a stocking. You know, my wife puts like Christmas sweaters on him, his antlers. But he's a good dog. He really is. We took him to the vet. They said he's 13, but he's in really good shape for a 13-year-old.
Wow.
That makes sense because we got him 6 years ago, and we got him from a shelter, and they said we think he's about 6, but he's in such good shape that I always thought he was a lot younger. I mean, when he was younger, dude, I've seen him take leaps where he could clear a picnic table.
Yeah.
Not the long way, like the short way. Like it was like a horse. You see all the muscles in his chest and everything. Very very athletic dog. And he's funny too. He's got a like if we're not paying attention to him, he'll go like pull something off the table. Like if he can get my hat, he'll pull it off the table and he'll go sit in the corner and look at us and be like, we don't give him enough attention.
Maddie, I've got to tell you, that picture you shared with us last year is probably the most presents I've ever seen inside a home.
Yo, I remember that.
You
Yeah.
probably packed your own again,
Well,
didn't
what do
you?
you got? Like you got like 6 kids, right, or 5 kids?
8.
8?
Yeah,
Wow,
he's got 8.
man, I can't even handle 2, dude.
That's why Maddie's always at work. There ain't no way around it.
I mean, I guess if you have that many, you kind of just learn how to ignore them all. So if they fight, it's like, yeah, whatever, another fight. So this is what Clifford is. He's a box miler. I mean, obviously this isn't him, but you see how he's got the muscles down there. Yeah,
Hmm.
like see these muscles. Clifford's got a much broader chest than this.
Now that's the cool part. Do you find yourself gravitating towards the grandkids, Matt?
In the old days, everyone did it, right? It was very common. Like that right there. That if you told me this was Clifford, I would believe you. That's exactly what he looks like.
Good looking dog.
He is, man. I literally would walk him. People have literally like pulled over and they're like, "Oh wow, what kind of dog is that?" Anyway, so that's my buddy there. We'll probably go for a nice hike today. All right. Yeah. Well, the way I see it is this, at least when I'm old and decrepit, I got someone to take care of me.
That's right.
Anyway, going back to this oil here. So if you don't trade oil, that's okay because you could trade ETFs that are designed to follow oil. Or, for example, you could look at ERY, which is designed to follow the technology sector. I mean, sorry, the energy sector. But the energy sector is like 90% correlated, if not more, with oil. So if you think oil is going to go down, this ETF will go up by twice as much as energy goes down. So if energy goes down 1%, this will go up by 2%, roughly. So you don't need to be afraid of trading commodities. And a lot of times we get really good ideas in them. We had a lot of those good ideas a while ago when natural gas was kind of easy to trade. But now it's gotten so quiet, natural gas. Well, I don't know. I mean, relatively, it's not as easy. But that's how things are. Sometimes things are easy to trade and because you can kind of really get a good feel what's going on. And sometimes they stop being like that. So you just take that off the screen and you trade something else.
Avi's asking about PCE.
So is that this income composite ETF? So this thing pays so this pays about a 9.9% dividend, and that's probably legit. Sometimes when you see a really high dividend, it's because of some kind of anomaly.
Oh, he said the PCE was 3.2.
Oh, really?
Yeah.
3.2. So I wonder why this is wrong over here. Actually, you know what? We can go check that out on VZ Pro. Go over down here. Whoops. Well, that. All right, it's VZ Pro. Yeah, sometimes those when you see if you see a really high dividend, a lot of times it could be an anomaly. It could be some kind of a payout. There are things though that pay around 12 or 13%. I would say that's probably the. If you see anything that's higher than that, there could be some kind of anomaly. Because if something's paying 20%, everyone in the world would buy it.
You'll have to go to news, Mark. That's just going to give you the detail about a specific company on that tab.
Oh wait, actually, I want to see the key data. Oh, whoops, something went wrong.
Hit home.
We're over here.
Nope, the little home thing looks like a house. Then in your top news, put in PCE.
Top news over here.
Mm-hmm.
Open news. PCE. All right, let's try this again.
No, it's bringing you back to that. Just grab it from Trading View, Mark.
PCE. Yeah. Yeah, I mean that's what it says there. But like I said, anytime a dividend is really high, you should always question it. But 9% is not. Well, you know what? Actually, we can add this in here. Financials. Sometimes I can get. All right, so we want to go to financials. Now this is kind of weird. Usually this has a maybe they're kind of tweaking it or something because usually there's 4 sections. It's not just statistics. I'll just give that a quick look again, real quick. So the technicals are all there. With financials, it's usually a big long list.
They're constantly tweaking this thing, man. It's a pretty incredible program.
Yeah, considering the cost,
Yeah.
it's pretty good. Chewy. Speaking of Clifford. Yeah, now look at that. That's your kind of classic reversal pattern there. It is a little overbought though. But if the market keeps moving ahead, then this will keep moving ahead. And here you could say this is your double bottom. Let's see here. Now, again, here's the neckline. So if you were to get into here on the confirmation of the pattern, it wouldn't have been up till here. So you would have missed this whole move. Now, as we all know, hindsight is 20/20. But in a perfect world, you would have seen this trend break, and then you probably would have gotten in it down here. You probably would have been stopped out here, but if you saw it continue into trend, you could get back in. And then the traditional technical analysis wouldn't buy it till up there. So we're overbought. You can see we're kind of right over here. But if the market continues to move forward, then this will. But it's probably going to stall out for a little bit here, catch its breath, so to speak. If we look, this stock really doesn't get it. It's been a while since it's been really overbought. I mean, when it used to be like really popular, it was a lot more active or volatile than it is now. All right, CBS. Yeah, and here's another one. Looks like it could be breaking out, but it's overbought. So as long as the market moves ahead, it'll probably slowly move ahead. I would say it probably could run up to maybe 85, which would be right up here. There doesn't really seem to be much going on in here. Nike's down. Good. Like no one talks about this, dude, but it's like, you notice how all the NFL players are wearing, they have Nike on their uniform? I mean, I hate to sound like an old fashioned person, but why can't they wear something that was made here in America?
Right.
I mean,
Not made by slave people like the Uyghurs, poor
yeah,
Uyghurs that are being slavery.
it's just the principle of it.
Yes.
It's like it's, it's an American sport traditionally, so we should wear stuff that's made here. But what gets me is that you don't really hear anyone talk about it. All right, so where is Nike? Let's see. Oh wow, it's all the way down here. So what happened here? I guess I assume it reported cuts full year revenue, outlook amid lower demand. One way you can kind of think about trading these things when the news comes out is my experience has been if the news isn't as bad as it seems and the first glance, the market will start to reverse somewhere in the mid morning because it takes a little bit of time for people to do their research and so forth to see how bad the news actually is. And if it turns out that it's not that bad, they're going to say, this news really isn't as bad as it looks. So let's go out there and start buying it. So if it starts to rally around midday, there's a good chance it maybe continues a little bit. And the opposite is true when something opens really high. If the news isn't as good as things seem, it starts to sell off like midday. If it is bad as it appears, then it's either going to stay flat or start to trend lower. But that's one way that you could kind of trend orders or trade what I should say trade earnings. Let's see. So CBS. I'm going to say no because actually that is the resistance. I was looking at this in the wrong way. So by January, so let's see. Today's Friday. So by the end of next week, would this be at 85? I don't know. My guess is no, because it's overbought. So maybe it'll get to 85 eventually, but it'll probably take a little bit of a breather. When we get overbought, that's going to draw some sellers into the market, and they can put pressure on it. A lot of these trading strategies are built on this concept of reversion to the mean. So things get overbought or oversold, they tend to reverse back to the average. And it's even the same thing in principle in the fundamental world because their fundamental managers tend to look for things that are undervalued, thinking that if they revert to the mean or the average of their sector or their industry, they're going to move higher. Prices are down. Prices fell last month for the first time since 2020.
Dude,
That's pretty good.
did you know that in the last 2 years, the life expectancy in America has fallen from 79 to 76.1?
Yeah, I did know that actually. It's the first time in history that people aren't supposed to live as long as their parents did. Well, not in
That's
history,
insane.
but in recent history. Well,
Right.
it makes sense because people are in such, people are so overweight and so forth and so on. And there could always be little anomalies. Like one of the highest death rates in our country's history was when people started moving off farms and into cities, like during the latter part of the Industrial Revolution, because they had never been exposed to all these diseases before. So the death rates shot up there. But I think it's probably because, in general, people are not in. Most people don't take care of themselves. It's unfortunate, but it's true. And even some people that do take good care of themselves, they have bad luck and bad things happen to them. And some people that don't take good care of themselves live into their 90s. But you got to kind of just play the odds. All right, so core inflation is down. That's good. Let's see if that is moving the market up. Yeah, man, men's sperm counts have fallen dramatically over the last 50 years. No one knows why. The social things have changed. People don't have as many kids. So whereas people always talked about one day the world will be overpopulated, now the thought is one day the world will be underpopulated. So that
Yeah.
whole thing has kind of shifted, and it does make sense. I mean, think about the old days, right? Think about if this was on the frontier, and it's like 1820, and you're out in Oklahoma, and your wife's having a kid. It's like there's like no hospital, there's like no medicine, no painkillers. It's probably really dirty, and yet somehow those people survived. Of course, a lot of them didn't, but that was like evolution, I guess, right? And now it's
Yep.
like people are born in hospitals and so forth. But man, can you imagine that, dude, living on the frontier? And it's like you got no medicine, no running water. Those people had it tough, man.
Yeah, well, you know what though? Back then it was kind of just free. You didn't have anybody telling you what to do. And back then, Mark, in the old West, when somebody came towards your property, you had to get the gun because you didn't know whether they were coming to kill your family. So, everybody was hyper protective and, I
It's
don't know,
like
it's a different time.
bleeding Kansas when the war in Kansas before the Civil War.
I tell you
Yeah.
what, you want to watch a good show, you should watch that Bass Reeves, man. That's a good one. He's
Oh, I saw a
supposedly the
commercial for it.
original. Huh?
I saw a commercial for it.
Man, he's the original, supposedly Lone Ranger. But I tell you, he's a bad dude.
Yeah, yeah. I mean, you had to be bad to be back then, right? All right,
Yep.
everyone. I think I'm gonna hit the road. Hope you all have a happy holiday, Merry Christmas,
Yeah, all of
and
that
so
stuff.
forth and so on. And I don't think I'm gonna be here Tuesday, but I'll definitely be back on Wednesday. But Tuesday should be a pretty slow day, the day after Christmas. As today, I believe it should be pretty slow. But
Yep.
all right, everyone. We'll see you next week.
Guys, thank you so much and enjoy your time with your family. Merry Christmas.